1490 WGCH. This is Kerry Lutz. You're listening to the Financial Survival Network. With me now, Marc Faber, editor and publisher of the Gloom, Boom, and Doom Report, to update us on the latest boom and gloom and doom going on in the world today. Dr. Faber, welcome. How are you today?
Well, I'm very well, and I hope you're fine. You can call me Mark.
Okay, Mark, and I just was brought up that when people had titles ahead of their name, you always used it, but I'm old-fashioned. What can I tell you?
Very kind of you.
So you're an economist. You've got specific beliefs about the role of government, monetary policy. Can you just share with us what in summary, your beliefs are?
Well, it is correct. I'm an economist, but I think I look at the world from a common man's point of view, and I analyze economic trends by essentially looking at reality and not textbooks from glass palaces at the Federal Reserve. And the world is never flat, as was the title of a book, but we have huge differences in economic developments in different parts of the world. We have some rising countries and some aging countries. I wouldn't go as far as to say that some countries experience an absolute decline, but this is the pattern of history, that countries have risen to wealth, and then they have disintegrated and become poor again. And I think that will continue to be the case. And for sure, not specifically the US, but the entire Western world is in a relative decline compared to nations that have young populations, growing populations, and plenty of energy and drive. In the West, we are an aging society that has become accustomed to wealth. We have grown in the last 30 years, principally because of a rapid expansion of credit, consumer debt, mortgage debt, and that has allowed people to live way beyond their expectations and beyond their means, and so will be a payback time and real incomes per capita in the Western world will essentially be flat or, in my view, decline, as has been the case in the last 10 years.
So that's the trend. We see it kind of in our everyday life. We see the West really, like you say, in a prolonged state of decline, and it's been propped up over the past generation and a half by credit, by fake money printing, by the Federal
Correct.
Reserve, right? Is there a hope for the West that they can dig themselves we can dig ourselves out of this morass, or is it game over and it becomes a world dominated by the Eastern powers?
Well, I'm very sorry to say I'm rather negative about the West's ability to dig itself out of the hole, principally because of the West's embedded arrogance and belief that they are superior in knowledge, innovation, skills compared to other regions of the world. And also, if I look at the crisis of 2008, it happened because of too much leverage and over-indebtedness. In other words, credit had grown for the last 30 years way above nominal GDP growth. So the debt to GDP in the US did rise from 140% in 1980 to currently 379%. But that excludes the unfunded liabilities, Social Security, Medicare, Medicaid. If we added that to the official government debt, it would be something like 800% debt to GDP. And the crisis happens, and what is the reaction of the government and its agents at the Treasury and the Federal Reserve? Is to increase credit once again, but this time not in the private sector, but in the government sector. So instead of analyzing the crisis and addressing the problem of excessive debt, you give the patient who is deeply sick more drugs and that have made him sick. And so the debt level actually continues to increase. And I think it's going to end in a complete disaster.
It's kind of like the punter at the casino, the gambler at the casino. He's $1 million, right? He's $1 million in debt, and rather than barring him from the casino, they up his line of credit to $5 million, hoping that he's somehow miraculously going to make it back. And we know that has to end in disaster. But
well, in China they can make it back because they just steal it from the government.
But in the U.S., the government steals it from the people, right?
Yeah, they steal from everybody.
And so there's going to be this collapse. There's going to be this disaster. And you said real estate in already depressed markets like Phoenix, like Florida, might be a good place to go because, hey, you can get these dirt cheap government loans that that anybody can qualify for. Anybody.
Well, I would buy it for cash.
You'd buy for cash?
You understand? My view is this. I think investors over the last 30 years, certainly since the low of the stock market in August 1982, when the Dow Jones was at 800, have become accustomed that asset prices, whether it's real estate or equities or bonds, always go up. And I think we're in a period which will end, and I don't know when it will happen, whether it happens tomorrow or in 5 years or 10 years, but at some stage there will be a huge wealth destruction. Now, as an investor, of course, I have also long positions in equities, not so much, actually hardly in the US, but I have equities here in Asia, I have real estate in Asia, and I have some cash and bonds, and of course a large position in gold. But basically, I believe that we have to start to think what will protect us the best from a complete wealth destruction. In other words, if the credit bubble really bursts and everything collapses, what is relatively safe? So I look at, say, I was in Atlanta and I was in Phoenix. I look at homes. They're selling, say, 30-40% below construction cost. Yes, they can still go down in value, and maybe they will. But all I'm saying is, in a complete collapse, they'll still have some value because people will have to live somewhere, and they won't be all empty. Whereas equities and bonds, who knows, maybe a lot of bonds will default or they will pay you back in money that is worthless. That is the real threat, say, in the United States, that the US will always be able to print money. And so if you buy a treasury, for sure you'll get the money back. The question is, what will the value of that money be? Because as you may know, Janet Yellen, another genius that is at the Federal Reserve, vice chairman now, she said, if it were possible to take interest rates into negative territory, I would be voting for that. Well, interest rates are negative, inflation adjusted significantly. Terms. Your inflation is, I bet you, between 5 and 10% per annum.
Oh, I think it's higher than that, and there's debates, because if you just use the Thanksgiving meal as the inflation indicator, 13% the past 2 years it went up each year, and you know, our inflation numbers are purely fraudulent because they exclude energy and they exclude food, the two things that we need to sustain modern life. We can't live without. So,
Yes,
yes,
I'm glad you're saying or spelling out the word fraudulent. The statistics that are published by the US government and by other governments as well, I may add, are completely fraudulent. They misguide the public entirely.
yeah, totally. And, if we're talking about a collapse, the one thing I tell people about housing is go to markets where you can own cheaper than you can rent before taxes. So if you get that tax benefit, hey, that's icing on the cake. And there are a number of markets now where you can actually own your home. Of course, you're partners with the bank unless you pay cash, but you can own cheaper than you can rent, and then it becomes a really good investment. And
Yeah, sure.
what about Joe Sixpack, our elusive Joe Sixpack in the U.S., who's becoming Joe Two-Pack because he can't afford a six-pack? He's got maybe 10,000 in his IRA to 20,000. Buy gold, buy silver. What should Joe Two-Pack be doing?
Well, I want to tell you something, because I'm just writing about this subject. Recently, a report was published. It's called the World Happiness Survey, and essentially talks about the happiness of people and that you shouldn't pay attention only to GDP growth, but also to other factors that make people happy. And I think one of the big factors in the happiness of people is if